A crucial week for the markets in other ways, too. The big tech trade as well. Nvidia kicking off its GTC conference today. Jensen Huang expected to deliver a keynote tomorrow night. Joining us now is Melius research analyst Ben Reitzes. He has a $170 price target on Nvidia and a buy rating on the stock. Ben, it's good to have you here to kind of set things up. I mean, you suggest that that Jensen Huang should be able to reassure investors on the big picture vision here. What do you think the hurdles are? What are the bogeys for sort of what he has to persuade investors of at this point?
Well, this time last year, the key thing was that it gives you confidence in the growth for the next year. So what we're looking for is things that help us know the long-term growth path a little better. Stuff like how much data center infrastructure is needed to support robots, autonomous vehicles, and then the new product roadmaps, like going all the way out through 2027. We should actually hear about the Blackwell Ultra, but then next year we get Rubin, and then hopefully he'll preview what's after that. This is usually a real mecca for AI, and we think a lot of partners will be there. So hopefully it gives investors a better feel for long-term growth. However, the short term, too, with all the worries, we should be able to get some good checks on demand.
Yeah, I guess there's a big debate, too, as to whether the DeepSeek announcement and the quick rethink of how long the runway might be for the very CapEx intensive part of this AI build out, whether it's going to just put a lid on valuations in general or, essentially keep these stocks on a shorter leash. You mentioned, and as I've discussed this before, the way Apple traded after the introduction of the iPhone, and the market quickly said, well, they're over earning. They can't keep this up. This is a hit-driven, massive kind of hardware cycle that we can't extrapolate into the future. And the stock got really cheap. How does that bear on Nvidia here?
Well, very similar in our opinion, because they're an industry pioneer and they earn a huge portion of the industry's profits. And I think that over time, Nvidia is going to have similar things as Apple, where they have to transition a bit more towards software. So I think Jensen's also going to announce a lot of software advancements, his NIMS and Cosmos architectures for building. And I think that those things will help drive their software revenue through consumption over the long term, which can help drive their multiple. I think right now the multiple vis-a-vis its growth rate is pretty ridiculously cheap. So the market's sitting there saying, hey, there's going to be a downward revision at some point because no one can keep up this kind of hardware growth rate because of the, just a risk of an overbuild. And I think the degree to which he sets up that what's akin to the Apple services, the software business, the ecosystem, the DGX cloud instances that create that recurring revenue over the long term really is the key to this multiple. They're the only semis company that can really do this and make that transition. And we have a lot of confidence in Jensen. He really obviously gets it a lot better than we do.
Ben Reitzes, an analyst at Melius Research, kept his buy recommendation on Nvidia, but reduced his two-year price objective from $195 to $170, citing a number of short-term issues affecting the stock. He identified several major constraints on Nvidia and other AI-related stocks, including possible tariffs, regulatory limitations, and cost-cutting computer innovations. Reitzes noted in a client letter that the industry's uncertainty has caused volatile trading behavior, with even Nvidia shares displaying market confusion. One possible turning point for the stock is the upcoming GTC conference in San Jose, where CEO Jensen Huang will give a keynote speech on March 18th. Analysts think Nvidia's fundamentals are still solid despite the recent decline, with the company's strong Q4 earnings confirming its leadership in AI technology. For the quarter that ended in January 2025, Nvidia produced outstanding financial performance that surpassed analyst and company projections. The business recorded $39.3 billion in revenue, a phenomenal 78% year-over-year growth, and a 12% sequential gain. Nvidia's data center business, which grew by 93% year-over-year and solidified its position as a once-in-a-generation growth catalyst, was a major contributor to this accomplishment. Furthermore, sales of the recently introduced Blackwell goods above management's projections, reaching $11 billion. Nvidia maintained an adjusted gross margin of 73.5%, despite a sequential fall of 150 basis points, which was in line with guidance as the firm managed increased expenses related to the launch of Blackwell. In terms of its future growth trajectory, Nvidia is still hopeful. For the April quarter, the corporation anticipates $43 billion in revenue, a 65% increase year over year, and a 9% sequential increase. Nvidia's strong market position and capacity to stimulate demand for state-of-the-art AI and data center solutions are further supported by this prediction, which also exceeds consensus estimates of $42.1 billion. Timothy Arcuri, a UBS analyst, reaffirmed his buy recommendation for Nvidia stock on Monday, keeping the price objective at $185. Based on research, Nvidia has a strong market capitalization of around $3 trillion and a flawless Piotrowski score of 9, which indicates great financial soundness. According to recent updates, Taiwan's semiconductor manufacturing company, TSMC, wants to reduce the capacity of its chip-on-wafer-on-substrate, CoWoS technology, by the end of 2025 and 2026. Arcur discussed these plans. From the initial estimate of 80,000 and 120,000 wafers, the expected capacity has been reduced to 70,000 and 110,000 wafers. According to Arcuri, the fall in TSMC's expansion plans is probably due to higher yields in the CoWoS process rather than a decline in demand. This is consistent with Nvidia's dominant market position, which is demonstrated by its remarkable 75% gross profit margin and 114% year-over-year sales increase. As a result, UBS's forecast for Nvidia's full-year GPU shipments, which stands at roughly 6.1 million units, is almost unchanged. But the product mix has slightly changed, favoring the B300 GBB300 versions more than was previously thought. UBS has modified its financial projections for Nvidia in view of the revised product mix. The current estimate of revenue for the first fiscal quarter, April, is around $46 billion. The 2025 and 2026 calendar year's expected earnings per share, EPS, are $5.27 and $6.22 respectively. UBS is still upbeat about Nvidia's stock performance in spite of the continuous uncertainties surrounding the uptake and spread of artificial intelligence, AI technology. The company's strong outlook on Nvidia's future prospects is further supported by the fact that its shares are now selling at less than 20 times UBS's projected EPS for the calendar year 2026. Analysis shows the Pro Research report provides in-depth research of Nvidia among more than 1,400 leading U.S. equities, and 27 analysts have recently raised their earnings projections. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
My next guest is starting to see some good buying opportunities, including in the Mag 7. Jeff Kilberg is the founder and CEO of KKM Financial. Jeff, a bit of a warning from Barry just now about, kind of jumping in too quickly and deciding that the market is a buying opportunity. So I'd love to hear how it looks from your point of view. Welcome.
Well, Kelly, happy St. Patty's Day, and I'm looking for a little luck of the Irish today, as I am starting to nibble at some of these names. And I've been super critical as we saw 20 consecutive days of Facebook, Meta, going straight up. I was critical of Nvidia on that move higher. So I've actually welcomed this repricing, this revaluation of these Mag 7 names. Tesla, let's put Tesla to the side, but let's talk about Nvidia. I think we're going to see some re-enthusiasm, not sure if that's a word, but we're looking for some re-enthusiasm with this GTC conference, and we're going to hopefully see Nvidia kind of get the investor base re-excited about the AI theme, which has worked so well. But I do believe there's been opportunity. When we go back about 6 or 7 trading days, Kelly, we saw the third largest put options on the S&P 500. That was the third largest ever. What do we see subsequent to that? We saw massive indiscriminate selling. Last week, it was hard to watch. Everything was getting sold. That is when the opportunity comes about, in my opinion, and I've harped on this a lot on the exchange. You want to be positioned for risk mitigation. You want to be buying puts when the VIX is at 14. You don't want to start buying puts when the VIX is at 25, 28, or even 30. So that's where I think there's opportunity inside of this March Madness, which has certainly happened despite the fact that we haven't had tip-off in the basketball tournament yet.
You were cautious on Nvidia going back to last summer. It's largely been kind of chopping wood since then. So are you a buyer of Nvidia now? Are you a buyer of Tesla now? Which of the Mag 7?
So I'm long Nvidia. I bought it last week and actually aggressively sold those 100 puts. Didn't feel great when it was down at 107, but here we are collecting that premium. Happy to own Nvidia. lower than $100. But at this point, in this moment in time, we've had a nice $10 appreciation in the move. I'm being very tactical.
In other recent news, Nvidia has garnered attention due to a number of noteworthy advancements. The company is preparing for the much-anticipated GTC 2025 conference, when it will introduce the B300 AI processor, which promises a significant boost in memory and speed and concentrate on AI servers. It is anticipated that this event would address market worries and maybe increase investor confidence. In an effort to improve gaming experiences by utilizing AI tensor cores in GeForce RTX GPUs, Nvidia has also announced a collaboration with Microsoft to incorporate neural shading capabilities into the DirectX platform. Citing worries over a possible slowdown in AI growth rates, Mizuho Securities has lowered its price objective for Nvidia from $175 to $168 while keeping an outperform rating. The company highlighted Nvidia's cutting-edge technologies and solid market position. Ahead of the GTC conference, BofA Securities also reiterates its support for Nvidia, stressing the company's potential with a buy rating and a price target of $200. Nvidia's future course is anticipated to be significantly shaped by its partnership with Microsoft and its next product launches. In order to learn more about Nvidia's technological innovations and strategic orientation, investors are closely monitoring these developments, especially the GTC event. In anticipation of the company's next GPU Technology Conference, GTC, Citi analysts reaffirmed their buy rating and $1,6,300 price objective for the stock. With the stock trading below the historical PE trough of 19x and now fully de-risking 28% sales exposure to both China and Singapore on AI diffusion restrictions, risk-reward looks appealing for a given stock. However, we don't think Nvidia is now in a position to comment on the impact of tariffs and AI limits on gross margins, which is why we think investors are waiting for a clearing event. Regarding the conference, Malik expects Nvidia will formally introduce the GB300 and its Blackwell Ultra B300 processor. The next-generation Rubin chip is probably of great interest to investors. Although no additional information about the chip or its architecture was disclosed, we believe that Vera Rubin will be a significant improvement over Grace Blackwell, especially in the area of inference, especially in light of recent management remarks. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
You've made the point, Ben, that I think the stock's trading, 40% lower in terms of a forward PE multiple than it was at the introduction of ChatGPT, right? Or right around the launch time.
Yeah, that's right, David. It was around 40 times earnings plus when ChatGPT was announced. Now, obviously, they've seen thousands of percents of gains in their net income, et cetera. But the funny part is it is cheaper, in that mid-20s multiple, even on this year's earnings, showing that folks are really worried about the long-term growth rate decelerating quite a bit. And I think that this is the kind of show where we get more confident in the long-term growth rate because all these partners are going to be there. You're going to see that this guy drives the industry, this company drives the industry, and it's almost irreplaceable, obviously. So we're hoping to get that good feel and hope we hear a lot more about their TAM, which is pretty open-ended.
Yeah, I mean, with so many of these stocks, positioning and sentiment has played a big role, I feel like. I mean, Intel, for instance, up another 8.25%. Speaking of just off this new CEO announcement. So I wonder what your clients, what you're hearing about NVIDIA at this point and how much has changed over the last few weeks, given the sell-off.
Well, it's all about whether right now there's a lot of worries around the Trump administration keeping the AI diffusion rules, potentially banning sales into China, and then obviously disrupting the economy, which then, God forbid, any of the hyperscalers change any CapEx plans. NVIDIA obviously would be hit, along with many others. And that's really the cloud that needs to be lifted. We wrote kind of tongue-in-cheek that we were hoping Donald Trump would show up and just say, hey, all's clear. But I think those issues will linger. So I think that, unfortunately, that's going to create a little bit of a multiple hit on the stock until we clear it. But we should clear it, by next year. I mean, there should be some rules of the road.
Yeah, so the cloud, you're waiting for that to lift as to whether these guys keep up the spending. All right, Ben, enjoyed the show. Thanks a lot for helping us out with it.
Thanks, guys. Always a pleasure.
Nvidia is in opposition to other data center stocks that billionaires recommend purchasing. Because they make it easier to store, process, and distribute the massive volumes of data that power enterprises all over the world, data centers have emerged as the cornerstone of the digital economy. The worldwide data center industry is expected to increase significantly through 2030, driven by hyperscale cloud development and enterprise digital transformation, according to McKinsey & Company. According to their analysis, between 2023 and 2030, the demand for data center capacity might increase by 19% to 22% annually worldwide, reaching between 171 and 219 gigawatts (GW) of capacity annually, compared to 60 GW today. According to McKinsey, in order to prevent a capacity shortage, at least twice as much data center capacity as has been constructed since 2000 would need to be constructed in less than a quarter of the time. Following the high-profile announcement of Project Stargate, a historic $500 billion program focused at upgrading data center infrastructure, investor sentiment toward data centers surged at the beginning of the year. But as talks of possible repeal of the CHIPS Act have surfaced later in the first quarter, excitement has subsided. This law has been crucial in changing local production capacities, as it was initially intended to boost American semiconductor manufacturing and lessen dependency on foreign suppliers. Investor outlooks have been impacted by the market's increased uncertainty brought about by the continuous discussion about its future. In light of these debates, a PwC analysis from February 2025 emphasizes the strategic significance of growing data center infrastructure for both global stability and technical growth. Relying on vital infrastructure in high-risk areas is making nations more cautious. Companies are implementing backup plans as a result of geopolitical tensions and trade restrictions that continue to reveal weaknesses in global supply chains. PwC goes on to say that entering new markets comes with extra difficulties, such as strong security and data protection laws, especially in non-US jurisdictions with strict compliance frameworks. Data center operators must therefore navigate a changing global marketplace while carefully balancing infrastructure investments, market demand, and regulatory restrictions. Charlie Sanchez, president of Infrastructure Advisory at Black & Veatch, spoke with CNBC on March 10th on the continuous increase in AI-driven infrastructure investment, especially in data centers. He underlined that there is still a strong commitment to data center expansion in the U.S. and around the world, even in the face of trade barriers. Businesses understand how AI can improve energy efficiency, streamline supply chains, and open up new revenue streams. Sanchez also emphasized how AI is a major enabler for future efficiencies in addition to driving demand for infrastructure. Furthermore, the architecture of next-generation data centers is already incorporating advances in AI and computing power, highlighting the need for ongoing growth and investment in the industry. In conclusion, data centers are essential to the contemporary digital economy because they foster global connectivity and innovation. A solid investment opportunity is presented by their steady growth trajectory, which is fueled by AI, cloud computing, and enterprise digitalization. With backing from both corporate and government stakeholders, data centers will remain at the core of economic transformation, serving as vital infrastructure for the data-driven future. Although JP Morgan analysts do not anticipate a significant change in the sentiment toward artificial intelligence stocks, Nvidia set the stage at its annual GPU Technology Conference, GTC, in San Jose, California, where the semiconductor giant showcased new developments. CEO Jensen Huang gave the keynote address on March 18th during the March 17 to 21 event. Even though investors' attention is still focused on AI stocks, deeper technical insights could be helpful for a number of Nvidia suppliers. JP Morgan analysts pointed to companies such as Amphenol, which could gain if Nvidia offers added reassurance regarding passive copper content. In addition, optical transceiver players like Fabrinet, Lumentum, and Coherent stand to benefit if Nvidia intensifies its focus on co-package optics. Offering both conventional and optical solutions for InfiniBand and Ethernet switches should reassure investors of a steady, diversified supplier base, according to analysts, even though growing co-package optics for scale-out networking may limit some volume potential for transceiver businesses. As Nvidia firmly determines the direction of future semiconductor developments, investors stay vigilant. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.